Hello, Maverick traders. Welcome out to your market roundup for October 28th. Corey here with you. We're always going to take a look at meaningful news. We're going to try to skate to where the puck is going through sector analysis and then highlight our very best ideas. Whether they're up, down, or sideways matters not. We just want the best trades possible.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So today was really a quiet day overall. Dow up 0.5%, S&P, NASDAQ flat. Russell bounced back, which was nice to see, up 1.6. But the big story continues to be oil. Oil is just getting hammered. It had this big upward push on fears of retaliation from Israel to Iran and so forth. As that has come apart, oil prices have come apart. Markets are in a little bit of a calm before the storm. So we're in this sideways range. And why do I say that? Well, I think everybody's focused their attention on things that are happening in the future. We've got a presidential election. We've got FOMC meeting next week, both next week. So who wants to make big bets and big aggressive trades? So we're in that calm before the storm, but certainly in oil prices, that's where there's some energy. That's where there's some emotion. Advanced decline line, about 68% of stocks going up. And the 50-period moving average is about, slightly bullish with 56% of stocks still above their 50 MA. But we've had some weakness. We've had some unraveling where the majority of stocks are not quite as strong as they were before. You can see just in terms of the price action, we held at this level and are attempting to bounce, but we gapped up and then we sold off. We gapped up and then we sold off. Today we gapped up and then we sold off. So they're at least using these gaps higher to do some selling. Somebody is pushing more shares, more supply onto the market. You can see the same thing in the NASDAQ. Long upper shadow that suggests you tried to push up, but you couldn't. Selling pressure came in. Today we gapped higher. They pushed it back down. So I think in terms of the question of supply and demand, there's somebody, big institutions are using these bounces to sell into it. Maybe that's just unwarranted nervousness before next week, but remember these institutions, where there's smoke, there's fire, and they're using any bits of strength to continue to dump. Not surprising, energy was down, but I would say energy did pretty well given oil prices were sharply lower. If you said oil was down 5%, I wouldn't guess that Chevron and Exxon were basically flat, that, most of these stocks were mildly in the red. I would have expected it to be a little worse. So that's a good kind of, they should have theoretically been down worse, but there's some relative strength there. They're not selling off aggressively. And certainly the sector that outperformed today had everything to do with the financial sector. Just strong across the board. Goldman, Morgan Stanley, Citigroup. There was some news there in terms of earnings results and things that have come in, but ultimately money has been rotating into those financial stocks. Now, we're still in a bullish market. You can't look at this chart and say, time to get aggressively bearish. It's just a little bit of a calm. So what do we trade? I'm going to keep it a little bit more even in terms of bullish and bearish ideas. Notice that on the upside, maybe we can look at some of these financial type stocks. On the downside, some of these sectors, the consumer staples, for example, seems to be struggling. So a couple of highlights. Here's CCJ. Now this is in the nuclear/uranium, big move there happening. You can see it's just a standard bull pullback, bullish engulfing type formation. Today, we've pulled back, found some support here. The expectation would be another push, the old zigzag, right? We just set a higher low. we should go up and make a higher swing high. If we look at PayPal, little different chart dynamic. Here we have an ascending triangle, but ultimately we've broken out and we broke out to the upside on volume. This is how you want a breakout to look. Larger than normal candlestick, increasing volume confirms the move. PayPal should continue to work its way higher in the coming days, next couple of weeks. On the bearish side, like I said, I think the focus for me would be on some of these consumer staples. General Mills just continues to bleed lower, and Coca-Cola continues to bleed lower. Here we had a gap down, kind of consolidated there for a day or two, and then just further selling coming in. So I would continue to push the gas a little bit on that consumer staples sector. Look at Coke, look at Keurig Dr. Pepper was popping up on the scans for something that's selling off with some real momentum behind it. So elections and FOMC results come out next week. It should be a little quieter this week than next. Mild market move happening right now, but even though the big events happen next week, I'd still expect, people positioning. There will be a couple of days of big moves coming here or there. We do have the payrolls on Friday, and then of course we're in earnings season. So tomorrow you've got AMD, Google, Novo Nordisk, Pfizer, Visa, a few different companies from a wide variety of sectors. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.